Good morning and welcome back everyone to the
It is good afternoon, my friend.
Oh, I'm so sorry. Good afternoon. I guess I'm still in the early board mood. That said, of course, the market has still held firm in the green territory. We started off on a very strong footing, but we have given up some of those gains, Santo, it seems, as was expected, given the fact that largely we have seen this trend that we start off on a good note, then we give up those gains, and then we have the 3 o'clock move coming in. It will be interesting to see if we see another upswing in the market in the next half an hour. That said, if you look at the Sensex and Nifty, they are, as I said, off the day's high, but the Nifty Bank Index, that is doing quite well. The Nifty Bank Index scaled a new record high during the session, so there is clearly a lot of optimism as far as earnings are concerned from the banking space. And if you look at some of the analysis that has come out for the second quarter, much of the heavy lifting within the Nifty 50 has actually been done by the banking stocks. So that goes to show the sort of heft that this sector is carrying. Apart from that, moving on to the F&O side, clearly all eyes will now be on how the index will expire tomorrow. The November derivative series will be ending or expiring tomorrow, Thursday, and all the eyes are at what level will the Nifty end. Now, from my conversations with analysts, it seems like the 18,300 level is the sacrosanct level, is where a lot of analysts are expecting the index to end. A lot of analysts are expecting that probably if we do see an up move today and we end up closing above the 18,300 mark, then clearly tomorrow could be a very, very strong session as far as the benchmark index is concerned. And you can get an indication of that from the options chain as well. There was a very strong amount of buying happening in the 18,000 call option. Now, yes, Santo will say, of course, it's not the buyers who matter, it's the sellers who matter. But from the conversations that I had in the market, clearly there is an indication that buyers were ruling the roost because of the fact that IVs, or the implied volatility of call options, Santo, were actually much higher than put options. Generally, the trend is that put option volatility, implied volatility is higher than call option. But recently, in the past few sessions, we are seeing more demand for call options, which is an indication that the market's mood, or at least traders' mood at this point of time, is very, very bullish, and therefore it seems like we are going to have a very strong end to the expiry, given the fact that this entire November series has also resulted in more than 3% gains so far.
Well, yes, it's liquidity driven at this point in time, CJ, and it's hard to fight liquidity, whatever one may argue about the fundamental side. That said, the same points that I've made earlier also, there is very little cheer on the street because traders and even most investors are not really making money unless they happen to be in the right stocks. But that said, you could still see the index Nifty making a new high soon, given the kind of money flows that we continue to see. In FNOQs, we are seeing some short build-up in the futures of Honeywell Automation, IPCA and Power Grid, while there's been long build-up in futures of GNFC, PNB and Chambal Fertilizers.
Well, Santo, coming back to this conversation we also had, I think 2 days ago, the fact that we seem to be become a little lackluster as we are approaching that record high. Now, I think a lot of the point of view among traders is that we need the heavyweights within the index to make that move. HDFC Bank, for example, or Reliance Industries, for example, we have not really been that participative in the past 1.5 to 2 months. I think traders are now waiting for those two giants to probably wake up from their sleep. And if that happens, then clearly we could take out the record highs. But without their participation, the view in the market is that it could become a little difficult for the index to probably cross beyond that 18,600 mark, which is where the intraday record high stands at this point of time for the Nifty 50 index. Moving on, of course, to the stocks that were on our radar today, and there were 5 stocks. First one from a very interesting space, and an about turn.
I knew you would be surprised by this pick of mine. Delhivery is the first stock on our watch list. Now, CJ, there comes a time, it's a lot about the price. When price becomes attractive at some point, even the worst of the most least loved companies at some point
I think you ought to tell that to investors on Nika and Paytm. They are still waiting for that time when the market will start loving their price.
Well, delivery stocks have taken quite a bit of a beating over the last month or so, more so after the company lowered its guidance for the rest of the year because it was seeing weakness in its e-commerce sale. Now, interestingly, ICICI Securities has upgraded the stock to a buy. It has trimmed its target price slightly, but has still rated the stock a buy from a sell earlier and now has a price target of 460 rupees. Now, the brokerage has listed 5 reasons, the 3 of them the main ones, which are that one, it's got the lowest cost structure when it comes to first mile, mid mile as well as last mile. Plus, technology has been a big differentiating factor for delivery. There it can claim to be much superior than most of its peer groups. And lastly, there is the strong balance sheet, which means that the company can continue to make investments. Now, ICICI Securities' main argument here is that the weakness that we are seeing in e-commerce sale at this point in time, it's not really structural. I mean, it's a phase, and so once that passes, then probably you've got valuations of delivery being quite reasonable, and maybe then onwards you could see an upside. According to ICICI Securities, the company could break even as early as 3rd quarter of this fiscal.
Well, Santo, I'm really happy that you and ICICI Securities have both seen the light. I have been making the same arguments that the decline
no,
in
but
the
there's a difference. Wait.
Yeah,
there is a difference. You made that point when the stock was at 1,000.
Yeah,
now the stock
absolutely.
is at 350, right?
That is okay.
So there's a
that
big
is
difference.
okay. That is okay. But the fundamental arguments have still not changed. Whether the stock is at 1,000 rupees or at 300 rupees. That said, of course, the long-term potential for delivery has never been in doubt. I mean, this was one stock. Even a lot of institutional investors, when the IPO was happening, were actually quite happy to put their fingers in, because of the fact that there seemed to be a business that was less susceptible to maybe cyclicality, the sort of other problems that other new age technology companies have been facing. But in the near term, clearly, while the stock price has taken a lot of beating, I don't expect a one-way move yet, Santo. I think in the near term the stock will languish till the time the view from the management sides starts to get better on FY24 earnings growth. What sort of commentary they will give probably after the 3rd quarter earnings, we will get a better idea of what sort of outlook they have for FY24, because as far as FY23 is concerned, there are clearly concerns over normalization of growth. The entire logistics space is going through that concern, because if you look at the logistics space in the first half of 2022, there was a very steep growth, Santo, because the base effect, and the second, that the reopening of the economy was happening. But clearly that demand is now normalizing, and therefore growth rates are also normalizing. So it will be interesting to see what sort of commentary comes in from the management of delivery post the Q3 earnings. But for the near term, I think the stock will probably not go anywhere at this point of time, because also there are a lot of multiple block deals happening on the stock. Pre-IPO investors are now welcome to trim their stake. A block deal happened today as well, and that is one of the reasons why the stock is down about 3.5% in trade. Well, talking of my first pick of the day, and this is KPIT Technologies. Now, the stock surged today quite rapidly on the bourses after the company announced that it has entered a long-term deal with Renault Group to provide software assistance basically for the electric vehicle venture that Renault is doing. Now, this is a large-scale order, so this is no means a small or a mid-size order. Clearly, a large order win, and I think that will come out when the Q3 earnings come out for the company. But I think this order win, Santo, boosts the longer-term potential in outlook of KPIT, the sales outlook for KPIT, and also reaffirms the market's confidence that KPIT could be a very interesting proxy play to the entire global revolution as far as electric vehicles are concerned. Not so long ago, I think 4 to 5 months ago, I think one of the foreign brokerages had pointed out that this company is largely catering towards providing software assistance and those sort of services to electric vehicle manufacturers. And there is a huge potential, given that a lot of legacy automobile makers are now shifting their attention towards EV, not only in India but globally as well. So the market size is quite huge for KPIT, and I think this is one stock that, after outperforming the benchmark as well as a lot of its peers in 2022, could continue to do the same thing in 2023.
Well, I mean, no disputing that, CJ. This is among the few technology stocks that's come close to now crossing the record high that it had made earlier this year. Consistent earnings again here, CJ, but just my quibble here is that there have been nothing spectacular as such. They have been steady. So if you see between 2020 and now, the company's top line has grown by about 30%, which is quite okay. But when you look at it, some of the other IT services company has been much sharper there. What I think KPIT has been able to do better than some of its peers is that it's been able to maintain its margins quite well. They have stayed around 19 to 20% consistently. Perhaps that seems to be what the market seems to have liked.
Well, Santo, moving on, your second pick of the day
is Federal Bank, again a steady performer. There's been the stock now seems to be digesting some of the gains that it has made over the last couple of months. It had seen quite a strong run up, and if you look at the quarterly numbers, CJ, it clearly shows that the stock is on a comeback path. Credit growth was pretty strong at about 20%. The asset quality has improved. Net interest margins improved by about 8 basis points to 3.3%, and given that we are in a rising interest rate regime, probably this trend could continue for the next couple of quarters as well at the very least. And the best part is that it's seeing traction across all its key segments. It's a corporate book, retail as well as SME. It had some asset quality issues still about a year back, but now most of it seem to be behind. So this is one stock clearly to keep an eye out for, CJ.
Well, Santo, that said, the returns, if you look at the past 1 month at least, have seemed to have slowed down. I think the sort of gains that the stock was posting on a month-on-month basis earlier this year, I think that has clearly tapered off a lot. And clearly, as you said, I think the market is now waiting for the earnings performance to catch up to the price performance that we had seen earlier. Even if you look at some of the momentum indicators and technical indicators as well, there are clear signs of some exhaustion coming in or creeping into the stock. So I would not be surprised if the stock sort of languishes the other constituents of the Nifty Bank or the Nifty Bank itself in the coming few months. But clearly, there is no doubt that the long-term re-rating potential for this company or this lender remains quite strong. I think a lot of brokerages out there in the market at this point of time are largely very, very bullish as far as Federal Bank is concerned. Moving on, the last stock on my radar today, and is a relatively known one and a relatively new participant in the market, is Kirloskar Pneumatic. Now, the stock has not really performed that much if you look at the recent past performance, but it seems like going ahead, I think the company could come into focus because the management recently, in a meeting with Antique Broking, has reiterated its guidance for FY23 despite some, slack in order from CNG gas stations. Now, this company is largely involved in pumps business, but they said that they are being able to offset the slack in domestic demand with rising traction on export front, Santo. So a lot of the export orders are helping to make up for the decline or probably muted growth that they are seeing in the domestic market. Overall, Antique has retained its buy call on the stock largely because of the strong outlook it has in terms of the market share gains that Kirloskar Pneumatic can get. Remember, Kirloskar is an organized player and pumps business is largely a very organized market, so there is a good chance of organized players or a market share of organized players shifting towards unorganized players shifting towards organized players. So clearly that is the main theme why Antique is giving a buy call, and they believe that going ahead the company has the potential to record growth of more than 40% on an annualized basis as far as its earnings are concerned over the next 2 to 3 years. So a very bullish call coming out from Antique on Kirloskar Pneumatic.
Well, and the last stock on our watch list this afternoon is Voltas. The stock continues to lose ground steadily, and one of the triggers has been the second quarter earnings, which have been fairly lackluster.
Yeah.
So the company is having a tough time actually trying to gain market share and at the same time not compromise on its margin. It's made the electromechanical project division has still done okayish, but the main pressure seems to be in the unitary cooling products and the room air conditioners. Besides that, in the refrigeration space, because of the high base effect, that too was under pressure during the quarter just gone by. So clearly at this point in time, the blow that the company took in the first quarter of this year or the last quarter of the previous year, it's still to come to terms with that. It's lost considerable ground, and since then the stock has been struggling and probably could continue to do so for some more time.
I think, Santo, yes, at this point of time, clearly the market is not in favor of Voltas, but my thing is that, with a lot of the consumer durable companies, white good companies, there is a decent hope of revival in margins. I mean, yes, margins also took, not only because of the, the effort to bring back market share, but margins also took a toll because input costs were quite higher, considerably higher for a lot of these companies. But going ahead, as we know that sequentially we have seen a massive decline in a lot of input material for white good companies. So therefore, there is a good chance that in the second half of FY23, you could see a decent amount of revival in margins. Also, as far as the FY24 outlook is concerned on volume side, I think there is a lot of optimism that volumes will recover. So there, largely because the rural economy should start doing quite well in FY24, given the fact that at this point of time it is going through a little bit of turbulence. And in the long term, Santo, I think given that India is largely a consumer economy, brokerages like Morgan Stanley are expecting the per capita income of the country to more than double in the next 10 years. I think clearly a consumer durable company like Voltas, which is a market leader largely, I think will remain in demand for investors. It will see a strong earnings compounding, barring the near-term blip that we are seeing on the margin and market share front.
Well, and let's quickly take a check of the markets, and at this point indices continue to hold on to the early gains. We have the Nifty at 18,265, that's up 21 points. In fact, the market has given up some of its gains, CJ.
Yeah.
The Sensex now just about 50 odd points higher than its previous close. A seesaw between bulls and bears at this point.
And we are approaching towards that flat line, so it will be very interesting to see whether we end the day in the green territory or we end the day probably below the 18,250 mark. Because even if we do, Santo, the point here being that there has been a lot of put writing as far as the 18,200 put option is concerned at that level. So there is a decent amount of confidence in the market that the benchmark index will not fall below that level at this point of time. Clearly, that is a very, very strong support for the market. And we have seen that in the past as well. The indices recently went below the 200 mark, but very quickly came back above that level. But if you look at sectorally, the Nifty Bank Index is doing quite well. The Nifty Bank Index is higher by about 0.5% at this point of time. The indices that are taking a beating is actually Nifty IT. The Nifty IT index is now in the red, and the Nifty Metal Index has also joined Nifty IT. The Nifty Metal Index is down about 0.3 to 4% at this point of time. So clearly, the metal and IT stocks not doing that well, but the rest of the sectoral performers in the market are in the green territory right now.
Well, and what are the key things that we are keeping an eye out for, CJ?
Well, Santo, the most important event will be, of course, the minutes of the US Federal Reserve's monetary policy meeting that was held recently. Investors will be looking out for cues in terms of whether there are discussions or whether there were discussions with respect to the size of future rate hikes. Also, any sort of concerns that were probably outlined by members of the FOMC with respect to the slowdown in the global economy as well as the US economy. So it will be very interesting. It's a very crucial minutes that market is awaiting for, and that could set the tone for the rest of this year because the next monetary policy meeting, I think, would probably be in January, if I'm not wrong. So it will be very interesting to see what sort of outcome comes out of that. Apart from that, in the US, investors will also be waiting for the building permits data for the month of November, as well as the unemployment claims data for the week that is ending on November 24. So a couple of things to look out for, and I think that could probably set the tone for the market tomorrow morning.
Well, and with that, it's a wrap on this edition of Markets with Santo and CJ. As always, thanks for watching and also writing in. Continue to do that, and we'll be happy to take up any queries that you may have.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.